Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, October 27th, 2021. The S&P did not make an attempt at getting to a new high above 4590 and heading towards 4600, which was an open possibility, and quite frankly, sort of has gotten a lower probability weighting now, but I can't call it zero. So I still have to leave open the possibility and the probability that the S&P will turn on its heels very similarly to what the NASDAQ did today and just race up, make new all-time highs again, and then go into a stronger wave down. But if I had to interpret as it is and labeling the completion point for the intermediate wave B, which is an irregular wave B, and the minor C, the minute 5, et cetera, down. And we have started in an intermediate C wave down, which I would be expecting once this is complete. So even though this may still have another leg up to do, it would still produce the same result in terms of once it's complete, what I would be looking for. So whether it starts here or whether it starts up 50 points from here or 100 points from here, I think it still will have the same results. Now, having said that, putting the finishing points here, it's fluid, and with the understanding that, hey, the S&P can just turn on its heels and head up. We still have Amazon, we still have Apple to report. Both carry a pretty solid weighting in the S&P. So very easily could go. We saw the effects of Google and of Tesla as Tesla continued to rally. It kind of put a little spunk into the buyers moving into the S&P, but the broader market and the balance of 500 stocks did not fare all that well. And we did see some stronger downside activity in some of the financials and in other companies or other component companies in the S&P. So if we are in the beginning stages of an intermediate C wave, then the best I can do with this information, again, fluid, markets in motion, it'll begin again in 25 minutes and we'll be into Globex, et cetera, et cetera. And then it still travels around the globe and everybody gets to have their say on what they feel took place here in the United States and what the tomorrow may bring. So here we go. I feel if we're in that C wave that I'm starting on a minute level. I'm not going to go up to the minor level, even though it's an intermediate, because it tends to count it too fast. And this is why you'll see here. So if I have this is minute 1, minute 2, and then we're starting to go into a third wave, then it subdivides, not just once, but twice. Then it started to fall more freely this afternoon. In the last hour of trade, the market dropped an additional 20. Now, what would be expected from here is that with this type of a subdivision, that it's going to be a fairly sizable third wave. And I would suspect that at some point within this third wave, which began here, that the 200-day moving average on the hourly chart will be broken. Now, what does that tell us if we go up to the daily chart? And we're looking at it to see, well, what could happen? It continues to sit right on top of the 4-day moving average on the daily chart. It kind of broke below, came back up, and it's now sitting right to it, awaiting further information, other directional input, et cetera. So we have to leave open the potential that the market could just go whoop and go right back above that level and begin to head up to these other levels, which still are there, just now more obscure as we start to head lower. So the daily, if it breaks and can close below this 4 moving average, then yes, we may see some additional acceleration as the market begins to show and develop additional weakness. A break below the 45.20, which is the 8, moving average on the daily, it would also give us some additional acceleration to the downside or more backing to continue to sell. So you can see on the daily, there's a lot of space to go down, and it's not going to be breaking its 200 until it got down to 41.9675. And being that it's a C wave down, third wave's longest and the strongest. I'm not saying that that's where the third wave's going to end up, because we're still at 45, 47. It's quite a drop. Can it do it? Of course it can. But I would expect that it's going to start to break there. And as a C wave, I'd be looking for it to break below 42.60, which was the low of wave A. Now, I'm going to take this one off, which gave us those upside, because I want to add a different, I can always put them back, but a different. So I'm leaving on the outside ones that would show us that a regular B wave, if it still had upside. These are the areas, 617, 660. But now I want to take a look at some downside for a C wave. So I need to start back up here at this high, take it down to the lower wave A, and up to the high wave B as it stands right now. So, and because it's an irregular, and how the calculations come in is that for the C wave, we would be placing it at, or the most common relationship is that wave C is going to be 1.618 times the length of wave A. And that's at we'll bring it back. 41.18, 41.19, right in that area. So the zone would actually likely be 40.90 to 41.20 in that area. That's where wave C would be expected to go. So you can see it's like, yeah, we're confronting a decline, and it can get ugly, and it could produce a lot of really good trades to the downside. And maybe there's going to be a lot of repositioning, et cetera, but it certainly is not the end of the match. And although it can be bigger, it can be more devastating. This is a larger corrective phase that we are in. This would just be the first 3 waves down for the next leg. And that would just put us on a primary level. So it would be a primary A. And then we have a primary with a cycle and a super cycle. It's starting from a super cycle wave 4. That'll have 3 large corrective waves of cycle degree, and then again of primary degree, and then again of intermediate degree. Now, whether that A wave comes down in a 1, 2, 3, 4, 5, or it comes down in an ABC, it's still going to build off of that as we move out in this whole scenario. So I continue to look for the completion of this B wave. If it's done, then I'm looking for downside. Our clues are going to be on the daily, it's going to start to show weakness once we start to break below moving averages. We're still holding above the daily 4. And then we have, then we have the daily 8, and then the daily 20, and then the daily 50. So they're still up pretty high. The daily 50 is at 44.32. That's how far it really has to come down from current levels before we really can put strong support behind. Upside's done for right now, we're heading lower, and until we can get done. I mean, it's the same thing that as we went through this cycle down, it took all the way for it to break the 50 before we got some more stronger downside. We never did break that 200, and we may still not break it necessarily. It still should provide some pretty good support unless there's additional information, geopolitical, economical. If there's additional information that's going to be saying, no way we're buying the market, and everything becomes sell, and assets are going to be liquidated because there's a strong move out of US stocks and bonds or whatever. So there will be a lot of withdrawals. And that could produce a very much stronger downward wave. So we'll see. We will see. In the beginning, though, that's where we are. So let's go back down off of this daily chart. Thank you. And let's open it back up and take a look. So for tomorrow, if we start coming off, the first real support for this move is 45.22. And that's minimum. That's only 2.236. That this initial wave down in comparison to the A wave would be equal to moving 0.236 of it. And that fits nowhere, but it should provide some support. And it may just be support for this inside wave. Could the S&P fall $26, $25 tomorrow? Absolutely, absolutely, would be easy. So if the Dow continues to kick butt, it'll be easy. So in any case, yes, we could get there. Then we do have the hourly 50 at 45.16. And a break of that, we should get additional acceleration to the downside. Upside, I believe, will be limited. Here's what has to happen if the market is going to change its tune and tell us that, nope, we're going up, we're going to make new highs. It needs to break, of course, above the 4 and the 8, but the 8 and the 50 have just crossed. So it has to get above the 50, which is at 45.62, the 20, which right now is at 45.63, and then it has to get above 45.76, 45.80, and then it's got 45.90 before it starts heading towards 4,600. So there's a lot of proving ground. And I think that it's the path of least resistance right now is down. We have price support here at 45.28. We have additional price support just around that 45.22 area. Then we have additional support right there at that 200-day moving average. We have 45.16, and then we have additional price support at 15. So it all works that we have support on the way down, still about 4,500. So these are all very possible moves and can all happen tomorrow to Friday. Not a problem as far as possibilities. This is where I'm going to leave it right now. So we need to continue to trade smart, trade according to the moving averages, trade the price action. Your breaking of moving averages in either direction continue to give you support to a continuation of a move, or when they break and then they bounce back above, can give you reason to pause and possibly rebounce. So there's a lot of things that the moving averages help us to see. So use them. Use Fibonacci. Work out retracements, if that's what it is. If you're looking to see from this point to this point, where's resistance on the way back up, draw retracements. Put it right there, that high to that low. Now you have retracements for up here. And you can see what levels it needs to break if indeed it has intentions of getting about 45.93. I'm sure a lot of it will match up with existing levels. So that's where I'm going to leave it. The next update will be Thursday, the 28th.